Hey, Premier Investors, it's Adam Schroeder here with Grant McMillan, my co founder here at Premier Turnkey. And we want to thank you for blessing us with your time and joining us to hear our real estate talk. I know, a lot of you might not have heard about us too much. You might not know a ton about our background. So we wanted to come to you today, tell you a little bit about ourselves, our background in real estate, and just kind of what our philosophy is about real estate investing. So, Grant, great starting a company with you.
Yeah, it's man, it's been wild, but it's I'm excited, and I know we're going to do good things. We're going to help out, investors, no matter where you're at in the journey. If you're a new investor or a seasoned one, we've got properties for you. So I'm excited for the next several years to see what we can do. So.
Yeah, so let's go ahead and get started with that. I mean, tell us, you mentioned kind of wherever you are on the journey. So, where are you on your journey?
Yeah, so we have a rental in Lubbock, Texas. We're based here in College Station. I've been here now for about 2.5 years. And about 10 years ago, we just started talking about what it looks like to invest in real estate. We obviously, with my background in banking, I was a banker for about 10 years. Majority of what I did was loan to builders and rehabbers. And so I've got a very extensive background in that. But during that time, we started thinking about what would it look like for us to dive in and have our own real estate journey. And so we actually bought a property right next to Texas Tech University. It was my uncle's childhood home. Bought it for like 70,000, put another 70 in it, and now have it rented to college kids and have had it rented for the past 10 years to several different groups, but right next to the university. So it's been a really good play. We also did another one. It was going to be a fix and flip, and that's a whole other story. But we learned very quickly that you've got to make sure that your numbers are right. Otherwise, you walk away and you have one of those lessons that cost you a little bit of money, but it's probably the best money that we could have spent. So, what about you?
So, I've got, and I'm going to have to count real quick. At the moment, I believe we have 8 investment properties, 2 lots, and our primary. So, started kind of learning about real estate back just around '06, '07, right before that happened. And, didn't really do anything. And then around 2017, really started deciding, hey, let's get into it, see how it goes. So bought our first 3 investment properties in Memphis, Tennessee, still own those to this day. We're starting to look at selling 1 or 2 of them as we go through it. And then, those were all rehabs built in like the 50s, 40s, and 50s. And then we decided to start kind of scaling up a little bit in terms of quality and price point. So we went and bought 3 properties, 3 new builds in in Atlanta, the Atlanta, Georgia area. We also in between, those are 3 that we still own. In between, we bought some rehabs in Jackson, Mississippi, a rehab in Little Rock, Arkansas. We sold those off since then. Now we also own a new build that we had built in Cape Coral, Florida, and we have one build. Not It's not a new build, but it was built in the early 2000s. Think about 2004, 2005, in North Carolina. So we've got those properties going for us now, getting us cash flow, getting us appreciation. Like you said, some years have been really good. Some years have been not so great.
Yep.
Some years have definitely been rougher than others, but overall, we even on the years that we have negative cash flow, we look at our equity position and our net worth continues to grow because over time, real estate goes in the upward direction.
Yep.
So we've been doing that. We're really focused, kind of where the company is going as well. And we're really focused now on investing in new construction because we've learned over the years, and you've seen with your banking background and just talking with investors, that buying those cheap investment properties, you can make some money for a little while, but at some point in time, your tenant selection isn't the greatest, your tenant quality isn't the greatest. You end up with some damages, and suddenly all that beautiful cash flow you thought you had uh, disappears into the ether.
Yeah, and it's like one of those things where they say, your cheapest option often becomes your most expensive option. So, with new construction, new builds, you don't have the issues that you do with a 1954, pier and beam house, which those are great. I love them. But for an investor that's wanting to be truly passive and have that turnkey experience, I think the new construction is going to be the way for them to go.
Yeah, and so, especially when you've got the rehabs, they call it, and I've heard somebody mention kind of like the 7 year. I don't know if it was the 7 year itch or something like that, but after you can rehab it to really great quality, but after 7 to 10 years, it starts showing its age, right? Like you can only rehab it to a certain quality before you start getting into some more some more serious issues, especially the way I tell people on the kind of upside of these properties. If you look at the ones, you look at the properties that are, let's call it $100,000, and you can rent them for $800. Well, the average income to rent that you need is 3x. So if you've got an $800 rent, that's $2,400 a month. You're talking about somebody who has $30,000 a year
Right.
in income. Now, granted, that's on the low end. That's your least qualified, your lowest qualified. It might be higher, but let's just say even $40,000 that they're making. The fact of the matter is, your increase in rent is limited in that regard, because your $40,000 a year person doesn't have as much disposable income as somebody who's making 80, 90, $100,000 a year, but can't afford a house, right? And then you look at your appreciation, which is where, if you look historically, a bulk of your net worth growth comes from. Somebody with $40,000 a year can't, there's not a whole lot of upside on the appreciation side that they can get, that a lot of other, higher income people can get, as they especially save up for their down payments and do that. So that's why I started realizing, hey, cash flow is great. I really want my properties just to sustain themselves and give me a little bit of money for future kind of maintenance issues that might come up. But I'm in it in a good location for the long haul to see the appreciation. I know they say you can't eat appreciation, but you can definitely sell it.
Yep. It's kind of like what you remember the old rotisserie chicken cooker, the Ron Popeil, set it and forget it. That's kind of our approach too, is that, we're not looking at cash flow, we're looking at that equity play. And so, we bought that for 70, we put another 70 in it and just had it reappraised a couple of years ago, and it's at 225. So, and that's with just putting, $70,000 into it. We did quite a few, decent upgrades. We're getting really good rents on that house. But even in that market, it's worked out to where it's like, just set it, forget it. We don't want the cash flow. We're doing it for the appreciation. So,
Yeah, and just so people are aware, we're not talking about jump into a massive negative cash flow situation to
yeah, not at
to
all.
get something that's going to appreciate. We're talking, you want to, focusing on the cash flow year one especially is not the most important thing, because as I tell people all the time, there's a lot more years in 2 through 30 than there are in year one. So that pro formas, I mean, we have pro formas on our website. You can see them there, Premier Turnkey, rei.com. You can see them there, and they're going to showcase year one. But we want to talk to you not just about your year one experience. We want to talk to you about how your portfolio is going to perform over years 2 through 30. And so that's why, we're talking to people and why we're choosing the markets we're choosing. And we've got a lot of market information you can find on the website. Happy to talk to you about all of it and break it down for you. But really, when you look at your growth over time, you want to make sure your market is way more important than just the low price point that you get in. If you look at, you hear the stories, right? You listen to podcasts, you watch HGTV or whatever, and you hear about these people who are retiring on, and a lot of people say, I want $10,000 a month cash flow, right? That's my goal. That's my goal. Well, the fact of the matter is, the people who generally have $10,000 a month cash flow don't have $10,000 a month every month. The reason they're able to get there is their job is buying and rehabbing homes. It's finding those, those homes that are $40,000 that they can put $60,000 into, that can be worth 150, 160. But you look at that and you see they're not doing it with one or two. They're playing the law of large numbers.
Right.
in these situations. So unless you're going to go out and make it your business and are going to build up a portfolio with 50, 80, 100 properties and play it, because they know I'm going to have evictions, I'm going to have vacancies, I'm going to have damages, but I'm going to get so many properties that it's not going to matter. And not everybody can or wants to do that.
Right.
I don't know about you, Grant. I don't want to do that.
No, not at all. Avoid that at all cost.
Yeah, I'm in it for the passive nature. I'm not in it to be outside of some house swinging a hammer every day. And I know you can. Um, I know people flip homes from afar. That's You're playing with fire in a lot of cases on there, because contractors can upcharge you. Sometimes contractors don't do what they say they're going to do. You never know if you're actually getting good ones. You can't visit it all the time, and so it's possible. I'm not saying it's not possible, but it is a job. And if you're
It's
not wanting a second job, maybe it's not for you.
it's a major task, even if you're in the same community. I mean, I know that when we were doing ours, like just trying to get the tradesmen over there, they say they're going to be there at 3 o'clock, and then the next day they still haven't shown up. So even if you're local and you're trying to do it, it's still a huge task.
Yeah. So our investment philosophy here at Premier Turnkey is what we talk about. It's finding good markets. It's finding good properties inside those markets. With us, you're right now, if you go to our website, you're only going to see new construction, because we're able to find new construction everywhere from $200,000 up to $400,000, which is kind of the sweet spot for it. Now, obviously, your $200,000 homes aren't necessarily in the neighborhoods that are fantastic and phenomenal right now, but they're in neighborhoods that are getting built out. There's a lot of new construction in those areas, so you're kind of getting in at the it has a negative connotation, but you're kind of getting in at the beginning of the gentrification of the neighborhood. And over the next 5, 6, 7 years, there's going to be a lot more growth in the area, leading to you being in a better position. But we have a lot of stuff that's also in that 270, 280, 300 range, that are in areas that are 75, 80% owner occupied, which tends to, over time, raise prices, helping raise rents, and putting you in a better situation. So that's kind of our philosophy: is you invest where it's smart, you invest in the growth markets, and you let time do its thing. Because like I said, you can't eat appreciation, but you sure can sell it, and you sure can 1031 exchange it, and you
Yep,
sure can pull your capital out. So that's
exactly.
did I miss anything on our investment philosophy there, Grant?
No, I mean, I think that the way that we view it too is like that's the end point. But how do you get there? Well, you allow us to be the ones to kind of do the heavy lifting. We've already done the research. We've already had the conversations with the builders, with the property management companies, to make sure that this is a good play for you, for us. We're not looking at a market that we're not willing to invest in. So it's got to work with our buy box. And if it doesn't work with our buy box, we're not going to put you in that as well. So the end goal is for you to have, appreciating properties, but also to get there, you can allow us to help you in that journey by letting us do what we know best. So,
Yeah, and if you want to schedule a call, if you're watching this, obviously there's a QR code on there. If you're listening on the podcast, just audio, we'll have it linked in the show notes, and you can schedule a call there. You can go to the website, premierturnkey.rei.com, and see our inventory. But I want to talk about kind of what Grant just touched on, and that's kind of our goals for the company and for investors. And that is, we're not just a place where you can come and buy a property. I mean, you can do that pretty much literally anywhere. There's companies out there, there's websites out there. You can buy a property, you can walk down the street and call a realtor on a sign and buy a property. Our goal is to provide value. And so when we look at how we're going to provide value, like Grant said, we've talked to the builders, we've talked to the property managers, and we are always negotiating with them. And what we're negotiating with them is cash back on deals, getting them to not necessarily lower the price, because lowering the price doesn't help you right now, but getting the cash back will lower the amount that you're in, because capital, let's just admit it, none of us has unlimited capital. Even Elon Musk eventually would run out of money. It'd take him a few more days than me. But eventually we all run out of capital. And so the less capital you can put in a deal, oftentimes the better. Now, you can put too little capital in and end up in a rough spot, but if you can get some of your capital back after closing, that can be huge for the growth of your portfolio. Or if you want to look at it as cash flow, that's even bigger, because now you can say, oh, I got $30,000 back. That's, you know, what, 10 years or something, like 12 years of $250 a month cash flow. I think it'd be two and yeah, 10, 10 years, 12 years, something like that,
Right.
to get that. And so, that's one place that we're providing value, but then we're providing value outside of that as well. Like, we're talking with property managers and getting them to waive some fees. Potentially we're talking with insurance companies to get them to lower some fees, or getting them, some of them can get you into programs that if you called up the specific insurer, they can't even get you that product. We're working with lenders to try to get you cash off, or credits back whenever you're closing. We are applying the pressure because they know us, they know what we've done and what we can continue to do for them. And so we're really working to create the value so that, Grant, you've heard me say it before. I love this saying. I'm gonna make each of you, if you choose not to use our services, you are actively choosing to take a worse deal
Yeah.
than working with us.
Yep. Exactly.
Yeah. So, Grant, tell us a little bit about, I mentioned those things, but can you talk a little bit about how we're able to do this? I mean, because theoretically, anybody could go to a builder and talk to them about that. Anybody could call up a lender and ask for it. But can you talk about how this is possible?
Yeah, I mean, it's all based on relationships. So we've built relationships with large national builders. We've built them with regional builders, local builders, and they always it's relationship based. So they're going to go to a place in which they know that their people, their buyers, are going to be taken care of. And anybody that's selling anything wants repeat buyers. So they know that if they send them our way and send us that inventory, that there's a high likelihood that we're going to have more and more repeat buyers. And so it's relationship based, but also we're able to, chat with different people and, like you said, apply that pressure and say, okay, what do you need out of this deal? Because, home builders are in the business of selling homes. They don't want to sit on it. They want to get it, out of their inventory because they've got to go back to the bank and say, hey, I've sold these 10 lots, these 10 properties. Let's re-up, let's go back to this other neighborhood because I want to build some more. And so they're constantly trying to get those properties listed, get them sold. They don't want to sit on them. So there's some negotiation room for us to go in and say, okay, what do you need, bottom line? And through that, we're able to say, okay, we can pass this along to the end buyer. We can pass some of this on to the property management company where they're going to put it in escrow. They're going to allow that first year to be taken care of, different things like that. So we've got a lot of different ways that we can do it, but it's really just relationships and being able to have those conversations and build trust with the builders, and then build trust with our network of investors. So
Yeah, I mean, if you think about it, if Adam just went up to, you know, DR Horton or Lennar or anybody like that and said, "Hey, I want to buy a property. What's your net? I just want to hit your net." They're they're gonna laugh,
yeah,
right? They're gonna say, "Well, congratulations, you're my primary home. Good on you, buddy. We're really proud of you." But if Adam, the business owner, comes up and says, "Hey, I could bring you, 10 people who will buy one from you now, but they're going to be looking, every year, they're looking to get one or two, and I'm bringing you 10 people a month." Suddenly they start listening, right? And they say, "Okay, well, now I will tell you my net," right? And I can get close to that net, because with me as a single buyer, they're going to say, "Well, we have our net, but then there's the real value. And so we want to get as close to that real value as possible because you're just a one off." But now, as we're bringing multiple, they're willing to get closer and closer to their bottom line that they need. And like you said, a lot of these companies have shareholders. I don't know if y'all know this, but shareholders want to see profits.
yep,
They want their profits to increase every year. Um, a lot of these, like you said, they want to go to the bank, but just holding the note on these properties is thousands of dollars a month for these builders, because I mean, they're taking out loans that are not your 6% 6% owner occ or investor loans. We're talking potentially, what, Grant, you were in banking, 8, 9, 10%, would you think?
Yeah, I was, obviously I was in banking during a different interest rate environment, but yeah, I would say it's around, 7.5 to 9%. And yeah, they don't want to have that outflow if they can sell it. So as soon as they sell it, they go on to the next one because they're in the business of trying to sell houses. They don't want to sit on them. So
Yep. And so we're here to help them. We're here to help you. It's one of those things. I like to say it a lot. Real estate can be a win-win-win-win-win situation where you, the buyer, win, we can win, the builder can win, the property manager can win, the contractors can win, the tenant can win because they're getting a phenomenal place to live. And so, you know, why not, right? Like you can help a community, you can help out a person doing that, you can help out a local company, you can help out a national company if you want. And so we're able to provide a place where everybody can win whenever you're doing it in the real estate investing business. So if you want to talk to us about this, scan the QR code or click on the link in the show notes. Head on over to premierturnkey.rei.com. And we want to talk with you about your investment philosophy, your investing journey, and how we can help you get there. Because remember, you can live how you want to live when you invest where it's smart.